Hi, class. Today we're going to be looking at Chapter 3, which has to do with cost behavior. So if you'll hold on just a minute, I'm going to share my screen with you. I have built some cornerstone Excel exercises in Excel for you, and I want to share these with you. Cost behavior has a lot to do with, as its name implies, the behavior of cost in an organization. And in cost accounting, we're going to talk about a whole lot of different types of organizations, but mainly they're going to be for manufacturing businesses or service types of business. When we are looking at our exercises, and excuse me, I'm going to start us with exercise 3.1 because that's where we need to be. What we're going to be looking at in this particular exercise is something that we call mixed cost and cost formula. In review of what you should already have learned about in the previous chapter 1, or in a previous course, we've talked about cost terms such as fixed cost, variable cost, and mixed cost. And so today what we're going to do is we're going to review those cost terms with you and some cost formulas for helping you to calculate cost. And so that's what I'm wanting to do today. I'm going to go ahead and start with Cornerstone Exercise 3.1. And this is going to be for Callie's Gym. And Callie's Gym is a complete fitness center. And the owner, Callie Duquesne, employs various fitness trainers who are expected to staff the front desk and to teach fitness classes. While on the front desk, the trainers are going to answer the phone, handle walk-ins, and show them around the gym, and ask members questions about the weight machines. They're going to also do some light cleaning, which includes wiping down the equipment, vacuuming the floor. The trainers also teach fitness classes, Pilates, spinning, and body pump, according to their own interest and training level. The cost of the fitness trainers is $600 per month and $20 per class taught. Last month, 100 classes were taught. And so what they want you to do is to develop a cost equation for the total cost of labor. And so what I'm going to talk to you about today is a couple of cost formulas that you can use for about any cost equation that they're going to ask you for in these exercises. First of all, what you need to know is the cost formula. And cost formula is your fixed cost plus your variable cost. That will equal the total cost that you're looking for. A fixed cost is a cost that will remain constant no matter how many units are produced, or in this case, no matter how many classes are going to be taught, the total cost will stay the same. And so fixed costs do not vary in total because of the activity has changed. Fixed costs remain the same. They stay constant. In other words, they will not change with an activity level. So fixed costs are very important for you to understand about. There are many different types of fixed costs. An example of fixed costs could possibly be depreciation, especially if you're using the straight line method of calculating the depreciation. This would be an example of a fixed cost. There are many other fixed costs. A fixed cost could also be rent expense. It's possible that it could be a fixed cost, but be careful and read your problem carefully, because sometimes they will tell you whether it's going to be a fixed cost or a variable cost. And sometimes these costs could be used interchangeably depending on what the cost object is. You'll remember that the cost object is something that we're going to assign cost to. It could be a product, could be a division, it could be a territory, it could even be an activity. So just be careful and read carefully your instructions so that it'll help you to know what to do with this. The other type of variable cost or other type of cost that we're going to talk about is variable cost. And variable cost will change with the activity level. So for example, direct materials is a variable cost. So the more units you produce, the more your direct materials are going to be. The direct materials cost will vary with the level of activity. In that case, it was for a product. But variable cost, all of them basically do the same thing. They will vary with the activity level. And so that's what we mean by variable cost. The total of our fixed cost and the total of our variable cost together will give you the total cost of the activity. So that's the first cost formula that I want you to learn. Now in your textbook, they have treated this more like algebra and they've assigned values to each one of these costs. So a lot of times fixed cost will be represented with a F, or variable cost will be represented with a V. But look closely at the formulas when you're reading about them in your textbook. I like to simplify things, and so a cost formula that always works for me is fixed cost plus variable cost equal total cost. That's something that you need to learn right off or right away. The variable cost can also be found by breaking it down into a separate formula called the variable cost formula. And this variable cost formula tells you if you know what the variable cost per unit is and you know what the activity is, multiply the variable cost per unit times the activity and it will give you the total amount of the variable cost. So sometimes they might give you a variable cost per unit and they might give you the activity and how much of the activity has been done for a period of time. Then you would just multiply to get the total variable cost. Once you know that, you can substitute that variable cost into this cost formula. So you could also say that fixed cost plus variable cost per unit times the activity will also give you the total cost. But I like to keep things separate just because it makes it simpler to talk about. But you can change these formulas around, and they certainly have done that in your textbook. But I would suggest you keep it as simple as possible. That's what I'm going to do. There's no need to get complicated about cost behavior. Some things about cost behavior that you need to realize is, again, total fixed cost will not change with the activity level, but the variable cost will change with the activity level. If you're looking at per unit cost, the opposite is true. The per unit cost for a fixed cost will not change with the activity, will change with the activity level. So if the fixed cost per unit will change depending on the activity level, but the variable cost per unit will remain constant no matter how many units are produced. And again, this is the variable cost per unit that remains constant. The fixed cost, total fixed cost, will also remain constant. Total variable cost will change with the activity level, but the variable cost per unit stays the same. So make sure you're looking at the problem to see exactly what they're asking you for when you make your calculations here. So again, we're going to be a gym and we're fitness trainers, and the fitness trainers or we're paying our fitness trainer $600 per month and $20 per class taught. The variable cost per unit would be $20. The fixed cost is the $600 per month. Now, salaries is an example of a fixed cost. So my fixed cost is given at $600 per month. My variable cost is $20 per class taught. That's the unit variable cost in this case. And the number of classes taught is the activity. So there were 100 classes that were taught during this period of time. So what I would suggest you do first is find your variable cost, your total variable cost first, by taking your variable cost per unit, which was $20, and multiplying it by the number of classes, which was 100, it will give you the total variable cost of $2,000. This $2,000 then can be substituted in the cost formula. So if you know what your fixed costs are, which they were given, the salary was $600, plus the variable cost of $2,000, that will give you the total cost. So to develop a cost equation for total cost, it's really fixed cost plus variable cost equal total cost. Or you can change that formula around a little bit and simplify the variable cost and say that fixed cost plus the variable cost per unit times the activity will equal the total cost. The total cost in this case is $2,600. The next thing that they ask you is what was the unit cost of the labor per class for the last month? So what we do is we take this total labor cost that we found at $2,600, we're going to divide it by 100 classes taught, and that will give us the cost of labor per unit, which is $26. In the next part, they're asking you a what if. What if Cali increased the number of classes offered by 50%? So the fixed cost is going to remain the same. The variable cost per class is going to remain the same, but the number of classes taught is going to change. We're going to increase it by 50%. So if you multiply the number of classes times 150%, it will give you 150 classes now. We're going to put this information back into our variable cost formula first. The variable cost per unit is still $20 times the number of classes. This time the number of classes is 150. And if you multiply 20 times 150, it will give you 3,000 as the total amount of the variable cost. We're going to substitute that into the cost formula. Right here is where it would go. The total variable cost we know now is $3,000. To find the total cost of all the labor, we're going to add the variable cost and the fixed cost together. Remember, your fixed cost did not change. It's still $600. We're going to add that to the $3,000, and that will give us the total cost of labor if we increase the number of classes by 50%. The total cost of our labor is $3,600. Then it's going to ask you, what was the unit cost of labor per class? Again, we're going to take the total amount of the cost of the labor, and we're going to divide it this time by 150 classes, and that will give you $24. And then they wanted to know, or wanted you to explain why the total, or why the unit labor cost decrease to $24. Remember, it was $26 and now it's $24. Well, what has happened here is the number of our classes have changed. That number of classes would be spread out over the $600 fixed cost. Because the total fixed cost remains the same, when we divide it by 150, our fixed cost per unit will decrease. So if we put in $600 and we divided that by 150 classes, our fixed cost per unit is $4 in this case. Whereas before, our fixed cost was $600. And if we divide that by 100 classes that were taught, it gives us $6 as our fixed cost per unit. You can see it decreased. So our fixed cost per unit will decrease, but our variable cost per unit, notice it stays the same. The variable cost per unit remains constant no matter how many units are produced. So overall, the cost decreased because the fixed cost decreased by $2. And so $2 from $26 will leave you with $24 as the unit cost now. So it's very important that you understand the behavior of fixed cost and variable cost. It's also very important that you learn the cost formula. And this is the cost formula. And this is the variable cost formula. And you can modify this cost formula by substituting this variable cost formula in the variable cost place. And that will give you another formula to find total cost. And so the next exercise that I want to go over with you today is 3.2. And it too is the cornerstone exercise 3.2. In this exercise, they're giving you some new terms that you probably are not going to be familiar with. So I want to talk to you about these terms. The first term, activity availability, just means that this is the amount that the company could possibly do. They could possibly use for the activity availability. And in this particular problem, let me go ahead and read the instructions to you so I can point out to you what activity availability is. Corizon Manufacturing Company has a purchasing department that is staffed by 5 purchasing agents. Each agent is paid $28,000 per year. So what you have to be careful about is knowing whether this amount that's paid, if it's per year, whether it's going to be a fixed cost or a variable cost. The $28,000 per year is a fixed cost. And it's able to process 4,000 purchase orders. Last year, 17,800 purchase orders were processed by the 5 agents. So what they want us to do is to calculate an activity rate per purchase order. And there's some computations that I want to talk to you about before we actually calculate the activity rate. First of all, they have some given information for you. The number of purchasing agents is 5. The salary per year is $28,000. So what you would want to know is what the total salary is for the year. And that's what we call the activity cost. The total salary cost for the year is going to be $28,000 times 5 employees, or $140,000. So your number of purchasing agents was given and the salary per year was given. You have to figure what the total activity cost would be for the year. And that activity cost would be $140,000. The purchase orders for each agent that each agent is able to process per year is given to you. They told us that they could process 4,000 purchase orders per year. So what you have to find is the total purchase orders per year. And to do that, we would multiply the purchase orders for each agent per year that they're able to process was 4,000 times 5 employees. So 20,000 orders should be processed for the entire year. To determine the activity rate per purchase order, we would take the total activity cost of 20,000 and divide it by the total purchase orders. Oh, I'm sorry. The total activity cost is 140,000. We'd take 140,000 and divide it by 20,000, and that's how you would get $7. And $7 is considered to be the activity rate per purchase order. So we're assigning a rate to the activity. We are processing purchase orders. That's our activity. And so the rate of activity is $7 per purchase order that we have processed. In part 2, they want you to calculate in terms of purchase orders, and I'm emphasizing purchase orders here, the total activity availability. The total activity availability is 20,000 purchase orders. Remember, the total activity orders that we came up with per year was 20,000. So it's the same thing as what we've got on line 16 here, is that 20,000 purchase orders. Because we're looking at the activity, the purchase orders, how many of those that we should have processed during the period of time, that is $20,000. That's what we refer to as the activity availability. So during the year, we are supposed to be processing 4,000 purchase orders per agent. So we multiplied it by 4 to get 20,000 total activity. And that's the activity availability that we should be doing per year. Now, we did not process 20,000 purchase orders. They told us that we only processed 17,800. So 17,800 is what we refer to as the used capacity. We actually processed 17,800 orders this year, but we wanted to process 20,000. That's what we had expected. We didn't reach our expectations, so the difference is what we refer to as unused capacity. So in other words, we did not process 2,200 orders that we thought we were going to. And that's what we call unused capacity. And this is dealing with purchase orders. The total amount of purchase orders, again, that we expected to complete this year was 20,000. That was the activity availability. The actual used amount that we processed was 17,800. That was given. The difference between the activity availability and the used capacity is what we did not complete in purchase orders. It is the unused capacity. So we didn't meet our expectations. We were short 2,200 purchase orders this year. In part 3, instead of doing the purchase orders, they want you to calculate the dollar cost of the activity. I'm emphasizing here that it's the dollar amount of activity. To find the total activity availability, the total dollar cost is $140,000. In other words, we had 5 employees that we paid $28,000 apiece. The total amount of our cost that we're looking at for the purchase order is $140,000. They also want you to calculate the unused capacity in dollar amounts. So we're going to determine the activity available in dollars. In other words, I just restated that. We're going to determine the purchase orders that we did process this year, which was 17,800. We're going to multiply that by the activity rate per order that we came up with earlier, which we said was $7 per order. And when we multiply that out, that will tell us the cost of our used capacity. So the purchase orders that we processed was 17,800. Our activity rate per order was $7 that we calculated earlier. The total cost of our used capacity was $124,600. We would subtract the used capacity from the activity available, and that will leave us with the cost of the unused activity. So you can see it cost us money because what we expected did not happen. And so management would want to know about these types of things so that they can make better decisions on how to operate the company in the future. And in this problem, they've also given you a what-if analysis. What if one of the purchasing agents agreed to work half-time for $14,000? In the first part of this, they just wanted you to figure out how many purchase orders could be processed by 4.5 purchasing agents. So we still were processing 4,000 per year, but because one person was working half-time, we have to multiply by 4.5 employees. We have a half employee here. In other words, we didn't operate with 5 employees. We operated with 4 employees and one that was operating at half-time. So if you take the 4,000 and you multiply that by 4.5 employees, it will give you 18,000 purchase orders as our standard, or what we want to accomplish if we are using 4.5 employees. The activity availability then is 18,000 orders. Now it also is wanting you to calculate the unused capacity in purchase orders if this happened. So we were expecting 18,000, but in our information, the given information, they told us that we processed 17,800. So we still didn't meet our goal, even if we had 4.5 employees working for us. We still didn't meet expectations. So 17,800 would be subtracted from the 18,000 to get 200 units that we're short, or there are 200 purchase orders that we're short of our expectations, even with 4.5 employees. So you can see that management could be using this information to help them to direct operations. It all depends on what they are looking for and what actually happened. And we'll be doing a lot of comparisons about what the management wants to do and what actually happened to help us to direct operations in the future. So I'm going to move to exercise 3.3, and this too is Cornerstone exercise 3.3. And this exercise is just really wordy, but I'm going to read it to you anyway, because this information right here that I have highlighted is so very important to understand. I think they wanted to give you a whole lot of different background information about different types of companies, but they want you to apply some of the same concepts to this. So we're really looking at cost behavior in this chapter, and we want to be able to assign cost to our activity. And so account analysis we're going to use in this problem to help us to determine our cost behavior. Darnell Poston, who is the owner of Poston Manufacturing, wants to determine the cost behavior of labor and overhead. Darnell pays his workers a salary during busy times. Everyone works to get the orders out. Temporary workers are through an agency, and they may be hired to pack and prepare completed orders for shipment. During slower times, Darnell catches up on bookkeeping and administrative tasks while the salaried workers do preventive maintenance, cleaning the lines and the building, etc. Temporary temps are not hired during the slow times. Darnell found that the workers' salaries, temporary agent payments, rentals, utilities, and plant and equipment depreciation are the largest dollar accounts. So these are some of the accounts that we're going to be looking at: the worker's salary, the temporary agency payments, the warehouse rental, the electricity, and the plant and equipment. Now, it's very important that you read your instructions carefully. I cannot emphasize that enough to you. So I've highlighted what was really important in this particular problem. He believes that the workers' salaries and plant and equipment depreciation are fixed. So you can see underneath the workers' salaries, I put that these are going to be fixed costs for this company, and the depreciation is also going to be fixed cost. That's what the management has decided that they're going to do with the workers' salaries and the depreciation. Temporary agency payments are associated with the number of orders, since temporary workers are used to pack and prepare completed orders for shipment. So the temporary payments to the temporary employees is going to be variable. And I believe that they tell you that in here. But if they don't, it tells you the warehouse rental is going to be variable. And this is one of those situations where rent expense can be a fixed cost. It just depends on how management classifies it, and it depends on the cost object that they're associating with this. So they're saying that the warehouse rental is going to be variable, and he explains why he did that. So let me get back up to the temporary agency payments are associated with the number of orders. So these temporary agency payments are going to be variable depending on how much we use temporary employees. The total cost of those will be variable. The warehouse rental, as you can see here, is fluctuating throughout this particular problem. So the warehouse rental is going to be variable. And it tells you about that warehouse rental. It says Darnell rents nearby warehouse space. He can rent as much or as little space as he wants on a month-to-month basis. Therefore, he believes the warehouse rental payments are variable. That's how I knew that these were going to be variable. If these had remained fixed throughout all the months, this would have been fixed. But since they told us in the problem that this is variable, this is going to be a variable type of expense. And then it talks about electricity, and electricity is associated with the number of machine hours. When the number of it's associated with machine hours, this is our electricity. Notice that your electricity is varying, so it is a variable type of cost. So one of the first things that you probably need to start thinking about is whether these costs are fixed or variable. The workers' salaries and the plant and equipment depreciation are fixed costs. These are variable types of cost. Now, they have given us information about the classification of the cost. And you see that they are just looking at a 6-month period here from January to June. And notice that all the worker salaries stayed the same. That's how we know that the total amount stays the same per month. Then it's a fixed cost. The plant, equipment, and depreciation also stayed the same each month. Because it's stayed the same, it is a fixed cost. Because our temporary agency payments vary, it's a variable cost. Because the rental warehouse is varying, it's a variable cost. Because electricity is varying, it's a variable cost. And all they've done is totaled the 6 months cost for each one of these accounts. Information on the number of machine hours, orders, and parts for the 6-month period are as follows. So for 6 months, again, we are calculating our machine hours. We're also calculating our number of orders that we've taken and the number of parts. Because our activities, whatever the activity is, whatever the cost object is, will depend on whether we use machine hours, number of orders, or number of parts. Again, in that highlighted information, they told you how the variable costs were going to be calculated per unit. So I wish they'd put these in order, but they really didn't up here. They kind of tried to make things a little bit harder for you to see. But the electricity is based on machine hours. So electricity costs are based on machine hours because electricity costs are based on how much you operate the machinery. The machine hours would be a good way to assign costs to electricity. The warehouse rental, it says that they are going to be variable because different parts are going to be stored by posting. And so the warehouse rental is associated as variable with the number of parts that are going to be purchased and stored. So this cost is based on the number of parts that we had throughout the 6-month period, and this cost is based on that. And so the number of parts is based on the rental, the warehouse rental. The temporary agency payments is going to be based on the number of orders. And then what they did is they just gave you some information about the total number of machine hours that were used, number of orders that were processed, and the number of parts per month. Now, what they want you to do is they want you to calculate the monthly average account balance for each account. And then when required, round your answers to the nearest dollar and use your rounded answers in all of your subsequent computations. That's important there, class. That's why I underlined it. I wanted you to make sure you saw that and you read that carefully. We are calculating a monthly average of the account balance. So for our first cost, which was the average worker salaries, we're going to take our average worker salaries, which was $43,200, and we're going to divide that by the number of months. This is a fixed cost. We operated from January to June, which is 6 months. So I'm going to take this 43,200 and divide it by 6 to get the average worker salary of $7,200. Again, that's 43,200, total amount of our salaries for the 6-month period, divided by 6 months will give you the average worker salary per month, and that's going to be $7,200. You can also see, just by looking at it, that it was $7,200. So fixed costs remain constant in total, no matter what happens, no matter what the activity is. To find your average temporary agency payment, what they're going to do is they're going to take the temporary agent payment, which was $6,240, and they're going to divide it by 6 months. So in other words, when we're finding a monthly average, we're going to divide each one of these balances that they've given us by 6 months. So the average warehouse rental would be $1,700 divided by 6 months, $283. The average electricity would be $34.10 divided by 6 months, which would give you $568. The equipment depreciation is $13,200 divided by 6 months will give you $2,200. So the only thing they wanted you to do in this part of requirement 1 was to calculate the monthly average account balance. Take each one of these totals and divide it by the number of months, which in this case was 6 months. In part 1, they also wanted you to calculate the average monthly amount for each of the 3 drivers. The 3 drivers are the activity levels. When required, round your answers to the nearest whole number. So the average machine hours is found by taking the total number of machine hours and dividing it by 6. The average machine hours is one of the activity drivers. The number of orders is the next activity driver. We would take the total number of orders, which is this $17,000 amount up here. Excuse me, not dollar amount, but the number of orders total was 1720. We're going to divide it by 6, and that will give us 287 as the average number of orders. The machine hours, the parts is next. The total number of parts was 2,800. We'll take 2,800, divide it by 6 months. There's 6 months total in there, and that will give us the average number of parts. So our 3 drivers are machine hours, number of orders, and number of parts. These drivers will drive some of our activity cost, as we're going to see in just a minute. Now in part 2, they want you to calculate the fixed monthly cost and the variable rates for temporary agency payments, warehouse rent, and electricity. And if required, round your answers to the nearest cent and use the rounded answers in your subsequent computations. First of all, they want you to calculate the average fixed monthly cost. And to do that, you have to know what your fixed costs are. Your fixed costs were your salaries and your depreciation added together. And then we're going to divide those amounts by 6. Your salaries for the 6 months was $43,200. We're going to add to it the depreciation for the 6 months of $13,200. And then we're going to divide that sum by 6. This tells us that we had $9,400 as an average fixed monthly cost. The average fixed monthly cost, one more time, is the total of your fixed cost, which would be your salaries and your depreciation expense total, divided by 6 months. That's your average fixed monthly cost. So we calculated the fixed monthly cost. Now we're going to look at the variable rates for each one of the 3 drivers. The variable rates for the temporary agency, which is based on the average number of orders. That's the key there. And in your instructions, they told you that the temporary agency, they're going to use average number of orders to calculate their cost for this temporary agency. But in this case, we're just looking for the variable rate. So what we're going to do is we're going to take the average amount of the temporary agency payment, which was $1,040. We're going to divide that by the average number of orders, which was 287. So we're taking these amounts up here for our variable cost and dividing them by this to be able to get the variable cost per unit. Each variable rate is dependent on different things. So for the temporary agency, we're going to assign the cost based on the number of orders that they took. The number of orders, the variable rate is $3.62. We get that by taking the average temporary agency payment cost and dividing it by the average number of orders, which was 287. To get the variable rate for factory warehouse rental, we're going to base it on the number of parts. That was given to you in your information, that you would base it on the number of parts. So we're going to take our average warehouse rental, which was $283. We're going to divide it by 467, the average number of our parts, and that will give us 61 cents. The variable rate for electricity is based on the average machine hours. So we're going to look at the cost of the electricity. The average cost of the electricity for a month is $568. We're going to divide that by the number of machine hours, which was 4,933, and that will give us 12 cents as our variable rate. In the next part of this problem, they wanted you to express the results in the form of an equation for total cost. You'll remember that we said a while ago for total cost, we got to take our fixed cost and add our variable cost to them to get our total cost. Notice in this case, I just put average in front of each one of these because they're wanting an average amount for this time period. So what I looked at was my fixed costs first. They consisted of worker salaries and plant and depreciation. The worker salaries were $7,200 per month. That's the monthly amount of the fixed cost. The plant and equipment depreciation was $2,200 per month. Now I can get that by taking the total cost of my depreciation and dividing it by 6 months. So in other words, your total fixed cost divided by 6 months will give you the average fixed cost per month. The average fixed cost per month for this problem is $9,400. It's the same amount as we had up here. I just broke it down into the two different parts. It had two different fixed costs associated with it. It's the very same thing that we had here. Now, the next thing I want to calculate are my variable costs. And the variable costs are based on the rounded variable rates that we got up here. So what I'm going to do is I'm going to take my average variable rate for the temporary agency, which was $3.62, and I'm going to divide it by, I'm going to multiply it by the number of orders. Remember, when we're calculating variable cost, it's the variable cost per unit times whatever the activity is. In this case, the activity for the temporary agency payments is based on the average number of orders. So $3.62 times 287 number of orders, average number of orders, will give you the average variable cost for the temporary agency payments per month. The warehouse rental is done similarly. The warehouse rental was 61 cents. The variable cost per unit was 61 cents. We've got to multiply that by the number of parts of 467, and that will give us the variable cost for the warehouse rental. And this is per month. the electricity cost is based on the electricity rate of 12 cents, and we're going to multiply that by the machine hours, because the variable rate of electricity is based on machine hours. So 12 cents times the machine hours will give you the variable amount of electricity, which is $591.96. Then we're going to add our three items together to get the total variable cost. Once we have the total variable cost per month, we're going to add the fixed cost per month to that, and that will give us the average total cost. So the average fixed cost was $9,400. The average variable cost was $1,915.77. The two of them combined are your total cost. And then they proceed to do a whole lot of what if analysis. But basically, we're doing the same thing. We're just showing that there are different things that are going on with our activities, with our activity level. On July the 3rd, it says Darnell predicts that there will be 420 orders this time. So notice we've changed the number of orders to 420. We've changed the number of parts to 250. We've changed the machine hours to 5,900. And then they're asking you again, what is the total labor and overhead cost for July? And then they tell you to be sure you round like they want you to. First of all, we would start with our fixed cost. Notice that our fixed costs don't change. That's because fixed costs remain constant no matter how many units are produced. What will change in this what if analysis is the amount of the variable cost. The rates do not change. Remember, variable cost per units will not change with the activity level. So they're going to stay the same as what we calculated before. We're talking about the temporary agency first. So $3.62 is going to be multiplied by the number of orders. The number of orders this time is 420. That's how I get the variable cost for the temporary agency. The warehouse rental variable cost is calculated in the same manner. We're going to take the variable rate, which remains constant, doesn't change, but we're going to multiply that variable rate times the number of parts. This time the number of parts was 250. That will give us $152.50 as our variable cost for the warehouse rental. The electricity cost was 12 cents for the variable rate. The variable cost per unit remains the same no matter how many units are produced. We're going to take this 12 cents, we're going to multiply it by the number of units that we produced. And so our variable cost in this what if analysis, the electricity cost us $708. Combine all of the variable costs together, and that'll give you the total average variable cost for this period of time. And these variable costs would be added to our fixed cost to get the average total cost. And we have yet another what if analysis. What if Darnell buys a machine in July for $24,000? The machine is expected to last 10 years and we'll have no salvage value at the end of that time. What part of the cost equation will be affected? Well, our machinery, the more we operate it, is going to definitely affect our depreciation. Our depreciation is calculated using the straight line method. There was no salvage value, so we simply take the cost and we divide it by its useful life to get the annual depreciation. Now, what they want is the average depreciation per month. So we're going to take this, and that should say what we want is the depreciation per month. And we're going to take the annual depreciation and we're going to divide it by 12 months. So technically, the depreciation per month is increasing by $200. So what that means is the plant and equipment depreciation is going to increase by $200. Before it was $2,200. Now it's $2,400. So the new machinery caused our plant and equipment to depreciate more. So my total fixed cost increased. The variable cost would not change. They remain the same as they were before. As you can see here, here's your variable cost, and the total variable cost remain the same. To find the average cost, total cost, we will add the total fixed cost of $9,600 and the total variable cost together to get the average total cost. Notice the average total cost increased by that $200 that the fixed cost gave us. And so if we have a change in the total amount of our fixed cost, it will affect the total cost. And I should tell you that the fixed cost per unit would change too. The fixed cost per unit would be less in this case because we would still be using the same number of units to divide by. But anyway, if there's a change in the fixed cost, as it was here, we bought a new machine and we depreciated it. Our fixed cost increased, but our variable cost stayed the same. On the next exercise, which is exercise 3-4, we're going to learn how to use the high-low method to determine fixed and variable cost. This you've really already seen in a previous accounting course. This should be a review for you. And so what they have done is they have given us a manufacturing company. This time we're manufacturing items. And they've given us 12 months data on the purchasing cost and the number of purchase orders. So this is how much the cost of the activity purchasing is. These are the number of orders that we processed during these months. And notice the months are from January to December. So this is for a whole year that they've kept up with the purchasing cost and the number of purchase orders. When you're using the high-low method, it's going to help us to determine what our fixed costs are and what our variable costs are. And so when we use the high-low method, what we do is we're going to take the highest point and the lowest point of the number of purchase orders that we produced. So the month with the highest purchase orders that we produced is August. So we look for the highest amount in here, and you can see it's right here. We produced 560 purchase orders. That was the highest amount the entire year. So the month of August is our highest number of purchase orders. We also compare these purchase orders to determine our lowest point in purchase orders. So the lowest amount of purchase orders that we did was in February. You can see this 330 purchase orders is less than all of the other months. So the first thing you do with the high-low method is you're going to determine the amount that's the highest amount of purchase orders and the lowest amount of purchase orders. So in part 2, they want us to calculate the variable rate for purchasing cost based on the number of purchase orders. And we're going to round to the nearest cent. To do that, I'm going to take the highest month of purchase orders that we picked out, which was for the month of August, and I'm going to look at my cost for August, which was $20,940. That's where I get this amount right here. So $20,940 came from August. That's the purchasing cost. The purchase orders that I produced in August was 560. So this is where I'm getting the 560 here. It's what happened in the month of August. The lowest month of purchase orders was February. In February, we had cost of $18,065. We had purchase orders at 330. The difference between these two are just as what it says it is. It's a difference. The cost difference is $2,875. The purchase order difference is 230. So we're subtracting the lowest month from the highest month to get the difference here. Once we have the difference, we can determine the variable cost per unit. Using the high-low method, the variable cost per unit is determined by taking the difference in the cost, which was $2,875, and dividing it by the difference in orders, which was 230. That will give us a variable cost per unit at $12.50. This $12.50 variable cost per unit can be substituted back into the formula for total cost. In the next part of this problem, they ask you to calculate the fixed monthly cost of purchasing. And to do that, we're going to take our total fixed cost and our total variable cost. We'll add them together to get the total cost. In this case, right now, we don't know the fixed cost. They want you to calculate it. We do know the variable cost per unit, but we don't know, and we do know the total cost. I'm using the highest method. Now you can use either the highest or the lowest month for use in this particular problem. I've used the highest month, so I've used August calculations. In August, remember, they told us the purchasing cost was $20,490. This is the total cost. So we know what the total cost is. What we're trying to do is isolate what the variable costs are. And when we get those isolated and figured out, then we'll isolate and find the fixed cost amount. So to find the variable cost amount, remember our variable cost formula is the variable cost per unit times the activity. In this case, the activity orders. For the highest month, the activity of purchase orders was 560 orders. We will multiply that by the variable cost per unit that we just calculated, and that will give us our variable cost. If we know what our variable costs are and we know what our total costs are, we can subtract our variable from our total cost, and that will leave us with the fixed cost. So what we really did is we turned our original formula around. Remember, we said fixed cost plus variable cost equals total cost. Well, if we take our total cost and subtract variable cost, it'll give us our fixed cost. And that's what we did here. In the high-low method, we use this to estimate the amount of our fixed and our variable cost for this period. I want to emphasize to you that this is an estimate. It's not exact, but it's an estimate. We can use this method to help us to estimate our cost. And I want you to make sure that you note this. That's why I put this in, I highlighted it. You can use either the highest month of purchase orders or the lowest month. It doesn't matter. The total fixed cost will be the same. I just chose to demonstrate to you the highest method. You can use the lowest method. It works just the same. The fixed costs are still going to be $13,940. No matter how many orders are produced, it stays the same. It stays constant. The total amount stays constant. In part 5, it says, if Doheny Manufacturing Company estimates the next month will have 430 purchase orders, what is the total estimated purchasing cost for the month? So the only thing that's going to change is the variable cost. This time we have 430 purchase orders. We're going to multiply that by the variable cost per unit of $12.50. Remember, your variable cost per unit will remain constant no matter how many units are produced. So this stays the same at $12.50. But when we multiply it by 430, the total variable cost is now $5,375. The fixed cost stays the same, so the total cost would be the variable cost, total variable cost plus total fixed cost. Both of these added together will give you the total purchase cost of $19,315. Then they give you yet another what if. Well, what if in the coming year they expect 5,340 purchase orders? What will be the estimated purchasing cost? We do it exactly the same way. Our total variable cost will change. It will change because our purchase order number changed. The variable cost per unit did not change. It's still $12.50 times the purchase orders of 5,340, and that will give you a total purchase order cost of $66,750. The fixed cost per month remains the same. It stays constant, doesn't change. It's still $13,940. And when you combine, or excuse me, the only thing that's different is there's still $13,940 per month, but what they're asking you for is what is the cost per year? So you got to multiply that fixed cost by 12. This fixed cost per month by 12 gives you the yearly fixed cost. Then the fixed cost per year plus the variable cost per year, the two of these together will give you the total cost for the year. And so these are examples of how you calculate the fixed cost or the variable cost using the high-low method. So in other words, if we have a cost such as these that consist of both fixed and variable costs, they call them mixed costs. They're part fixed and part variable. This mixed cost we're going to need to determine what is fixed and what is variable. And that's what we do with the high-low method. And again, it's just an estimated amount. So I'm going to stop sharing this with you now. And we'll see you again next time. Bye-bye.